Hi everyone, welcome back to Be Rich. It's me, Vinod, recording remotely from Bangalore, and I hope you're doing well and all is fine. As I was saying in our group in Instagram, today was another day, day 3 of the year. I hope you managed to get some tiffin and coffee into the market and you're feeling rather happy about it. Well, certainly I did, like I shared in the group, and I hope you did do the last 3 days like I did. If not, Monday is another day. It's the beginning of the week. Time is not lost. All is not lost, as they say, and I strongly advise you to consider entering the market in tiffin coffee as we can compound year on year. Today's main video is going to be about why I calculated out that 4 crores, what we initially did a video on, saying that if you had put 40,000 rupees a month, it will get you to 4 crores in 15 years, and why that may not be enough if you really look at it, and how you should analyze things and to arrive at the number which is right for you. Because 4 crores might seem like a large number, may seem enough right now, but then again, it may not be enough when you really think about it. And of course, like last time around, I used my own life as an example because I do not know your risk tolerance, I do not know your life, nor do I know your expenses. So it'll be very hard for me to forecast that. So I assume to take my life itself as something, as a bellwether to figure things out as it goes. But before I get into that, a couple of things I wanted to talk about was, one, the market opened very positive in India today, and then it slid. Not very positive, it opened slightly in the red, but a lot of the stocks which we consider were all in the green. By end of the day, a lot of them turned negative. The stocks which were looking really negative was TCS was down almost 2%. Manappuram, which went up very positive in the market, almost breached 200, then went all the way down by 1.5% to 187, and Dr. Reddy was down almost 1.5%. Hero MotoCorp, some of you have been asking me if I should consider Hero MotoCorp at this price range. Yes, you can consider Hero MotoCorp at this price range, but the reason I don't talk about it is each share is being sold at 4,243, which I do feel for the average audience which is watching and participating in our channel and participating in our group, that is a lot of money to leave on the table as tiffin coffee. For some of you, that may be half the monthly budget or even full monthly budget. So keep that in mind before you get too excited about Hero MotoCorp. It may swallow more than you can afford to, because it is an opportunity nonetheless, I must say that. But to have that kind of capital locked in for a very long period of 10 to 15 years may be very painful for some of you. So be very careful before you jump into something like a 4,000, 5,000 rupee share. ITC was also down by 1.5%, and Natco was down 1.5%. So as I was saying, most of these stocks which we usually look at were down 1.5%. In the US, meanwhile, we can talk about Tesla. Tesla's prices have corrected by 4.5% to $385 after the result announcement. The main thing was the results did not meet market expectations, and all the other things I don't really think is of news to Tesla per se, about the arson attack and the shipping diversion and the industry-wide sales, EV sales are down. All that is true, but the problem this is particular to Tesla is they're not able to make the deliveries as expected, and the numbers are not there as investors wanted. That is the main reason. Right now, Tesla, I feel, is overpriced in terms of price to earnings. If you look at price to earnings, Tesla is at 103, and I think that is very, very expensive if you're asking me. If I have this kind of cash, I'd rather look at a Google right now than a Tesla. Some of this price surge which you've seen in Tesla is what is playing out in the American politics and where Elon Musk is currently sitting, and that is giving him access, and the investors in Tesla and the market feel that access is going to give them some rewards in the future. I tend not to speculate on things I cannot see or understand and I cannot forecast, and that falls into that realm. So if you have some kind of understanding on why Tesla should be deserved this kind of a price to earnings in terms of future earnings, please put it down in the comments saying Vinod, or reach out to me on Instagram and tell me, Vinod, why you think, give me your argument to Tesla. And if I'm wrong, I'll definitely stand corrected. And I would be more than happy to come on the video and say, I was wrong, Tesla deserves this kind of valuations. If you are in the US, I would rather look at Google right now compared to anybody else. And like Shashwat and Anand were talking about in their Substack, even Nike is at a good price point. Those of you who are willing to wait for some time. Nike is on a road to recovery. It is going to take time. It's not going to happen overnight. It might take 2 to 3 years where you're going to see an appreciation of at least $20 to $30 in the coming few years at least, is what I feel. There again, I'm not an astrologer. This is from what I can see and understand about Nike and the brand and seeing the past, how they performed and how it's going to go in the future. There's a lot of potential for Nike, those of you who do want to believe in the brand. Coming back to India, Vedanta, of course, is doing what it famously does, and he's been saying he's going to do, which is refinance his high-cost debt. And Anand has said this many times about corporates and governments, which is what they do. They never repay their debts. They always try and find ways to refinance their debt. And that is why even in the US, the Fed rate, interest rate being high and sticky at this point is not good news for the American government, because they also don't tend to close their debt. They try to find ways to refinance it. So there is something to look there and watch there. On Instagram, I had put up a question asking you guys, what should I do? Would you like me to explain to you why Japan in 1980s had the collapse it had and how it is relevant to us today? And should I explain why what happened in 1980 may happen today again with Trump coming into power, and how that can be important for us geopolitically and in India economy-wise, what can play out here? But then the other topic which you guys had voted was why 4 crores may not be enough 15 years from now. So you guys spoke and you decided that I should talk about the 4 crores. So I'll do the Japanese topic tomorrow when I ask you guys again on Instagram if I should choose Japan or if I have another topic at hand. We'll take another poll and see where we should go. Coming back to the point. So what is this? Why am I saying that 4 crores may not be enough? For that, I need to first lay out some groundwork of what I did and where we were, and then probably finally conclude on to explain to you, then you would understand why 4 crores may not be enough. If you remember the video which I did, I took 2,000 rupees for 20 days, that's 40,000 rupees a month, right? For 8 years, I'd make 1 crore, and by 15 years, I'd make 4 crores. For those of you who do not know what video I'm talking about, go check out the old video. I'm sure Rupesh should link it somewhere, and you can see that video. So if I had invested that 40,000 rupees a month, today I will have 4 crores. But then begs the question, is 4 crores enough? And that's why I said, I don't think it'll be enough. I will come back to that why in a little bit. So today, $1 is 84 rupees about, right? And rupee depreciates. That means it goes down to the dollar approximately around 4.5% per year. So in 15 years from now, we can say the $1 would be worth around 160 to 170 rupees, or in the worst case, even close to 200. What is happening in gold in terms of that? Well, it's $85 for a gram of gold today, and gold compounds at 7% annually. So 15 years from now, we can say 1 gram of gold in US dollars will be $235 to $240 a gram. So what would that mean? Well, in INR, that's Indian rupees today, 1 gram of gold is 7,140 rupees. In 15 years, that would be worth around 38,000 to around 40,000 rupees for 1 gram of gold, right? So in terms of gold, what happens? If I had 2.5 lakhs, that is my monthly budget, I'm saying. 2.5 lakhs, me, a father of 2 going to school, right? A family of 4 living in Chennai the way I do, around 2.5 lakhs, let's say, is a month, right? In terms of gold, that's around 35 grams of gold. If I use the rule of 72, the rule of 72 is you take 72 and divide it by the inflation rate in your area, and that gives you how much your money needs to double. Your cost of living, how soon it will double is what it says. So 72 by 8, India is around 8. That goes around 9 years. So every 9 years, it doubles. So 2.5 lakhs, 15 years from now, would approximately become 8 lakhs. That means the first 9 years, 2.5 will become 5. Then, of course, the remaining 7 years or so will become an additional around 3 to 4 lakhs. So I'm saying conservatively around 8 lakhs. So 8 lakhs would be the cost of living 15 years from now, if my cost of living is 2.5 lakhs today. So that would mean 15 years from now, at that current inflation of gold in dollar terms, my 35 grams of gold today, which I'm spending every month, will be around 20.5 grams of gold. That shows you how much erosion has happened to the currency over the last 15 years. That means today I'm spending 35 grams of gold. By the year 15 years from now, that monthly expense in terms of gold has reduced to 20 grams. But in terms of rupees, it's gone from 2.5 lakhs to 8 lakhs. That shows you how inflation works and how it's depreciating. And another funny thing is, those of you who aspire to go to the US and live in the US, let's say you're spending 2.5 lakhs today, and that's around $2,950 approximately a month here. 8 years from now, in India, your expenses, let's say, has become 8 lakhs. How much would that be in dollars? That will give you around $4,705 at that time. How your rupee cost has gone up by 8 lakhs, but your dollars, in terms of dollars, if you see, you have not actually increased it. We're now at only 4,705. So you will need a lot more dollars at that point of time. to maintain this kind of life. So all that said, that gives you an idea on where I'm going towards now. This is just a quick wrap up of what the previous video was. So the rule of 72 is what you have to use to calculate how much you need. So if I need, let's say, 2.5 lakhs a month, right? And there is a theory saying that whatever money you have invested in the equity market, I can withdraw from that 4% every year, and I can not worry about what's left in the equity market in terms of my capital or my corpus, because that will grow as the market grows. I can easily remove 4% and use it every year and not worry about losing my initial investment. So if you take that in kind of an idea into mind, 4% for 2.5 lakhs, that is 30 lakhs a year, I would need today 7.5 crores invested in the equity market. So every year I can withdraw 4%, which is roughly around 30 lakhs a year, or around 2.5 lakhs a month, to meet my expenses, and that 7.5 crores will not depreciate. It'll grow. So that is the idea. So you get that, right? So even today, to maintain my life of spending 2.5 lakhs a month, if I had invested, I would only have 4 crores. I would be still short of 3.5 crores. So this is why it is very important to plan and just not to invest and hope that things are going to be okay. It is good to start investing. It is good to get in the habit of investing. But to have an idea on where you need to go, you need to have a map and to play it out. So, for example, if 2.5 lakhs is 7.5 crores is what I need today, invest in the market, then begs the question, what will I need 15 years from now to make sure I'm okay? That I can match what I'm doing today 15 years from now. That means 15 years from now, 2.5 lakhs, according to rule of 72, would be around 8 lakhs. I would need 8 lakhs a month. Times 12, that's 96 lakhs a year would be my yearly expense on an average 15 years from now. That means I would need almost 24 crores invested in the equity market for me to withdraw 4% every year to survive 15 years from now. To reach that 24 crores, how much do I need to invest every month today would be the question. That means I would have to invest approximately around 1.1 to 1.2 lakhs a month today to reach that 24 crores. So if I have 4 crores, if I start doing which I am doing today, which is putting 2,000 rupees in the market, and 15 years from now, I will have 4 crores in the market, and monthly, if I withdraw 4% at that point of time, I would get 1.34 lakhs a month, right? How much would 1.34 lakhs 15 years from now be worth today? Today's 42,000 rupees will be around 1.3 to 1.4 lakhs 15 years from now. That means if your monthly expense is 40,000 rupees today, as you're watching this video, you will need almost 1.3 to 1.4 lakhs 15 years from now. You would need to have 4 crores invested in the equity market to maintain the life you're maintaining right now. So it kind of gives you a perception on what you need to do. So all this, I wanted to lay it out to tell you why. Because I want you to sit and plan. Plan you must. Because the way you have to do this, it's very simple. You add up all your monthly expenses. That's the first step. Then you add another 30% to it, because all of us tend to discount things and forget things to put into our monthly expenses. Then you use the rule of 72 by 8 and find out how much money that would be when you need the money. Let's say I'm saying 15 years for me. Maybe you have 36 years for you. That means you're very young. You're probably in your early 20s, and you say 36 years from now only I need the money. That means according to rule of 72, you have to put it up, double it 4 times. So let's say your monthly expense is X amount and you only need it 36 years from now. You need to take that X, double it once, double it twice, double it 3 times, and quadruple it. That means if your monthly expense is 1 lakh, that 1 lakh becomes 2 lakhs, 2 lakhs becomes 4 lakhs, right? I've doubled it 1, 2, that's 2 times, I'm at 4 lakhs, and I double it again, that becomes 8 lakhs, that's 3 times. 36 years from now, 8 lakhs will become 16 lakhs is what you will need for every month if you're spending 1 lakh now. So I hope that kind of gives you a perspective. If you need 16 lakhs every month, right? 36 years from now, right? 36 years from now, you need 16 lakhs every month. That comes to 16 lakhs. If you need 16 lakhs a month, right? Times 12, that is 1 crore 92 a year. And you'll need to have a corpus of 1 crore 92. I hope Rupesh can put these numbers up. 1 crore 92 divided by for a year of 4%. You need around 48 crores invested in the market 36 years from now. 36 years from now, how much do you need to put every month to get to 48 crores 36 years from now would be the next question in your mind. That would be at a age of around 18 in the equity market, you need to invest around 17 to 18,000 rupees today. That means if your monthly expense is 1 lakh today, right? 36 years from now, you'll need 16 lakhs a month to maintain the same lifestyle you're maintaining today. And that means you need to invest at least 16 to 17,000 rupees every month for the next 36 years to get you there. And that's why Anand says it's such a huge difference when you start early. The same number of me wanting to reach 24 crores instead of 48 crores for you, I just need to reach 24 crores to maintain a lifestyle of 2.5 lakhs today. It'll have to invest almost 1.10 lakh. So you understand why it is important to start early. So once you understand the rule of 72 and you use that, you calculate the corpus amount which you need, which is what I did. Just save, if my expenses is 1, then I said 36 years. I just did the calculation for you. My corpus is 48. Then you know how much monthly you need to invest. So this is why it is important to do this and to have this kind of an idea before you start investing. Otherwise, you're going to land up somewhere where you don't want to be. So now that I've got your attention, do spend some time. All of you who are with me on my Instagram, reach out to me there and tell me what is your year of retirement one, when you plan to retire, that is 36 years from now, 15 years from now, 20 years from now, and how much you calculated your monthly investment to be. I don't need to know amount of money which you want or whatever monthly and all that. I want to know how much do you need to invest monthly now so that I know that you managed to do this and understand this. I am there on the Instagram handle. You can ask me all kinds of questions and doubt. I will try and clarify this, and I will try and get this graphic put up to you guys with Rupesh on the video today. Hopefully that will happen because it's recorded a little late today thanks to me not being too well. Other than that, I do enjoy having time with you guys, and I do appreciate the time you give me and invest in these videos, watching us discuss on how to improve our financial health. I do wish you all the best. I'll see you again in the next video tomorrow, and I'll be there on Instagram encouraging you to invest on Monday morning. As always, do be safe out there and wish you all the best, and see you in the next video soon. Thank you for watching Be Rich today. See you another one soon. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.